Anyone can give up. It's the easiest thing in the world to do. But to hold it together when everyone else would understand if you fell apart, this is true strength. Miyamoto Musashi, the great Japanese swordsman, one of my heroes, never lost a duel and was in dozens of them throughout the course of his life. He was also an incredible artist, as well as philosopher, thinker, and warrior. And we can learn a great deal from Miyamoto Musashi. It is easy to give up, but the true master will stick with it until he achieves mastery. And I'm telling you, folks, this is not rocket science. All we have to do is figure out the direction of the stock movement. Think about it. It's a binary decision, up or down. Yes, there can be some sideways motion, but in the end, is it going to go up or down? We use the charts to help us make educated decisions, not guesses, educated decisions based upon what has occurred in the past using these indicators like the price percent oscillator, derivative oscillator, Bollinger Bands, the Heikin Ashi candlesticks, and our trend lines. We have a great training for all of our subscribers today. It is on using news, good or bad. And I'll give you a hint that news should never drive your decisions, but I want you to get that video. You will see it in the show notes. If you are a subscriber, if you're not, go to chartingwealth.com, sign up. Put in your name, email address for free. We'll send you the training every day. Also, please click the right at the bottom right-hand side of your screen. If you are watching us on a YouTube video, please click the subscribe button. We love to hear from you also. Always feel free to post your comments. And we do appreciate all of the people joining us podcasting-wise. And again, you're listening to the audio there. Look in your show notes. You will find all the things you need, daily market worksheets, weekly market worksheets, trade worksheets. They're in all the show notes, both at YouTube and with our daily email and on the podcasts for you. If you want to purchase our book, Charting Your Way to Wealth, please do so. I'm working on the new book, Optionable Wealth, where we're going to be teaching options trading and how you actually use options and how you can start with almost nothing using options to help build your portfolio, build your own hedge fund, and become whatever you want to be. Okay, folks, let's jump into these markets. A little screwy, of course, after the Fed meeting. Should the Federal Reserve have all the power they have? Of course not, but they do. That's why what they say ends up affecting the market. And what do we see going on? Well, things changed throughout the course of the day. We'll see that as we focus in more on these charts. We see that stocks are down, bonds are up, and gold is way, way up after going down yesterday. Let's jump into the S&P 500 first. We see that so far for the week, we now have a red doji, not a green up candle as it was as it was forming until the last day and a half or so. Now we have it's a spinning top. It's close to a doji. Means indecision tending down. Price movement is below now the weekly trend line. Price percent oscillator heading down. Derivative oscillator losing momentum. Down for the day, 0.87%. Don't think we're going to have a weekly vertical crossover by the end of the week. Don't think that's going to happen, but we do see on the two-day chart. Now again, this two-day chart represents Wednesday and Thursday. So this the two-day candle represents Wednesday and Thursday, and it is drawn now. It's got a little wick on top, big wick on the bottom, red, solid red down body, and a crossover on the two-day chart going down. Now that always precedes a crossover. On the weekly chart, it doesn't mean that's going to happen, but you got to have the two-day going down before the weekly is going to go down. That's just the way things work. The little waves have to precede the big wave. So it is a clean crossing, which of course means that it crossed at the same time the derivative oscillator I just came up with clean crossing. I'm going to use that. Clean crossing, it means the derivative oscillator and the price percent oscillator cross over at the same time. So we don't have an uptrade in the S&P 500 with that crossover. Let's look at the 4-hour chart and explore things a little more. What happened on Thursday morning before the Fed governors spoke is we had an up morning. I mean, again, it was a green spinning top. That is in some indecision, but tending up, green open box candle. And then a hammer down in the afternoon where things just way dropped off, punched way, way down. And then up in the morning a little bit on Thursday, and then rotating over, hammering down in the afternoon. Boy, you can see where the price percent oscillator was flat in the morning, and then boom, hockey stick down along with the derivative oscillator. So we'll wait and see how things are going to sort out. Weird, of course, when you have central bankers being able to reduce interest rates. How are things going to be affected is so interesting. I don't pay attention to news except to sort of see what people predict and how wrong they are. And of course, read all these articles. Stocks were going to boom. They were going to boom if the Fed governors cut the interest rate. Well, it wasn't a big enough cut, or it wasn't this, or wasn't that. All sorts of excuses for why stocks aren't booming, but they're not. So again, we are waiting to see how things shake out so we can ride things to victory. Now, what do we see? And again, the beauty of the weekly vertical crossover continues to prove itself. So what do we see going on now when we get to the Qs? We see again, this is really very, very close to a doji. It's gone from green to a red doji. Means indecision tending down, price percent oscillators heading down, derivative oscillators still positive but losing momentum. Not going to have a crossover going down unless it's a huge down day on Friday. 2-day chart, however, has crossed over. One thing I didn't do on that S&P chart is I didn't remove the trend line. We can, well, you know what we could do? We could actually move that trend line instead of having to recreate it again. We can just keep it there. And we're going to move our vertical crossover line to, since we have a crossover, and again, it's a clean crossing because we had the derivative oscillator and the price percent oscillator both rotate over at the same time. Those of you who are watching, seeing how quickly and easily I make these modifications to the chart, that's what's so beautiful about freestockcharts.com and TC2000. And don't forget, those of you who are using TC2000, look in your show notes. You will see where I have added a link to exactly what you're seeing on the screen, the Charting Wealth chart. It is there and available. And again, it is available for you who are subscribers to TC2000. And of course, freestockcharts.com is the free version. For our Patreon supporters, we also have your Bitcoin chart, and we will get that out to you. I also saved that and have a link for that that I'm giving out to all of our Patreon supporters to go along with that Bitcoin chart training. That is using the virtual mode of TC2000 you can use on anything, even your phone or iPad. So we see that there is a crossover going down, price percent oscillator, derivative oscillator. Go to the 4-hour chart. What do we see going on there? Well, we can see, of course, again, similar to the S&P 500, up in the morning on Thursday, hammer down in the afternoon, little up in the morning on Friday, and hammer down on Friday afternoon. Derivative oscillator gaining downward momentum, price percent oscillator heading down. So we'll continue to watch and see how these things sort out. Go back to the weekly chart, and we go to TLT, 20-year bonds. Now this, my friends, is interesting. Do you remember where I pointed out where we had this happen before, back on the week ending May the 18th, where things rotated over and then rotated right back up again about a year or so ago? Well, looks like it's doing it again. So what will that mean for us by the end of the day on Friday? May have a confirmed up move unless things really trash out, really would have to trash out in the morning on bonds. We can probably expect for bonds again to resume their upward move as they had done since the 30th of November 2018. What does that mean? I'm encouraging you guys to see what it looks like when we know it's going to be a crossover going up on Friday afternoon. See if you see a jumping in point then. If not, I mean, again, it looks like it's worked over and over and over again, as we talked about when I did that last podcast for you, or that last video and podcast for you about the gains that we have had so far this year, trying to find a jumping in point. The easiest one I could find was the last price on Fridays, and looks like it worked pretty darn well. Week in, week out, month in, month out. So why don't you try doing a practice trade on that? Just see how that works for you. We'll check it out. See what there is to learn from it. Remember, no harm, no foul. Use your trade worksheet if indeed that's where things go. So we have a big green up candle with a wick on top, little wick on the bottom, showing just a tiny bit of weakness. And of course, we go from the weekly to the 2-day. Oh, wait, we don't have a crossover yet. Now that's an interesting dilemma for potentially jumping in on Friday, because we don't have a crossover. This is so odd, friends. As I just said, the 2-day always precedes the weekly, and we haven't had that happen yet. How strange. Let's see what we see. Well, see, but the 2-day's not going to draw until the close of the market on Monday, because tomorrow will just be the first day of the latest. So that does present us with dilemmas because we don't have confirmation. But this is a real oddity. We can experiment. We can see what there is to learn on this. That is why I encourage you to experiment. That's why we don't use real money when we train. Why? Because real money goes away. Virtual money is what you learn with. So we'll experiment, see what there is to see on it. I don't like not following the rules, so I'm going to do it 2 ways. I'm going to see what things look like at the end of the day on Friday, if there is a jumping in point on the weekly, and then I'm going to hold off on another trade and look how things are at the end of the day on Monday, and if we have a jumping in point on Tuesday potentially for getting in. And again, things could get wacky tomorrow, and maybe there's not going to be a crossover, but it'd have to be a hell of a drop. So we'll experiment and see. That's what it's all about here. And again, that's what keeping your trader's journal is all about. Keeping your notes with your trade worksheet, daily market worksheet, weekly market worksheet. All those are available for anyone who's listening in the show notes, whether you're listening to a podcast, you're watching on YouTube, or you're a subscriber and you're getting our daily email. That's where everything is, plus that special training on the news, good or bad. Look for that in there. I want you to take that. So that's interesting. Don't have a crossover yet. Have a big green up candle with a huge wick on top. No wick on the bottom, blowing through that 2-day trend line. And lastly, we go to the 4-hour chart. 2 days of strong up movement. So again, continue to keep your eye on the prize. We're going to go now to gold, which hammered up 2.40%. Gold was already in a confirmed up move on the weekly, but a down move on the 2-day. We see so far for this week, much better than it had been looking. Look at that high of 136.43, prior week high of 134.95, so much higher with a green open box candle. Do still have that wick on the bottom. Don't like to see that for like super strong up moves like we saw the week ending the 28th of June, but that's what we're seeing. Price percent oscillator, however, is going up strong. Derivative oscillator still losing momentum, probably from that prior week and earlier in this week. We go to the 2-day chart. What do we see there? We see this latest 2-day candle, big wicks on the top and bottom, okay size candle, and again pushing higher. Did it go higher than back on the week, ending the 18th of July? That was 136.63, 136.43. So no, we've not hit a higher high. And of course on the, I'm sorry, did I say week? That was a 2-day chart. So that was Thursday, the 18th of July. And this latest 2-day candle has not pounded higher. Derivative oscillator still negative. Price percent oscillator has not crossed over going up yet. So again, that's quite interesting. Was a 4-hour chart showing us? It just now crossed over going up at the end of the day. So let's keep an eye on that 2-day chart, wait for it to rotate over, see what there is to learn from that. These are some screwy days. Remember, we are in the summertime trading zone, less volume, things are more screwy. And again, don't know that this idea that we might experiment with on TLT at the close of the market with a reverse weekly vertical crossover, don't know if that is going to be a good idea or a bad, but hell, if you don't experiment, you don't learn things. That's why we keep notes on all this stuff and a trader's almanac. That's what it's all about. So that's where we are as we end the day. On Thursday, go into the last day of the week, the second day of the new month of August. We so appreciate you being with us. Again, click that box at the bottom of your screen if you're watching the YouTube video to subscribe. And if you want to receive all the special trainings every single day, along with the daily market review and the weekly market review in your inbox, go to chartingwealth.com, subscribe. And the book is available. Look in the show notes. You'll see a link to purchase Charting Your Way to Wealth. We have an autographed copy right here for you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.